Good morning, everyone. Good morning, everyone. It is Monday, October 27th, 2025. It is so good to see you all this beautiful Monday morning for our Monday morning touch point, where we get to update the single best leading market indicator available for the entire area, the new listing to pending ratios, so that we can see exactly what is going on with the market. We're going to do a complete market overview so that we can start the week ready, so that we can empower our clients with the latest information so that they can make a good decision, so we can make a good decision. We're going to go ahead and get started. Lots going on this morning, lots going on this week, lots going on in the world. It's going to be a fairly sparse week when it comes to economic data because the government, of course, is still shut down. And I foresee that the government's going to be shut down, I'd say at least another 2 weeks or so. I would put it into the second week of November before there's any progress towards this shutdown. And because of that, some of the data that we usually rely on is simply not available. So we're just going to have to play it by ear and see what happens here in the next few weeks when it comes to rates, when it comes to economic activity. But what we do have access to is Austin real estate activity. And at the end of the day, that's really all that matters. What is happening with our market right here? What's happening with pricing, demand, inventory here in our area? That's really all that matters, and that's what we're going to start updating. As you know, we're going to update this new listing to pending ratio. We're going to start with updating the previous week. That's going to be from October 13th all the way through October 20th. We're going to see if we have seen any movement on pendings. I did update this information first thing this morning, so let's see if we have to add any pendings. That's going to come in at 345. Let's take a look at active under contract. That's going to be at 33. That does not change. Let's go from the 6th to the 13th. That's going to be 381. That's good. 381. Let's go ahead and update from the 29th to the 6th. That's going to be 474. I'm just going to take a few more weeks here and update this. 421, that doesn't change. We've got 456, that does not change. 8th through the 15th, 450. And then lastly, 1 through the 8th, 429. None of that changes, so we are good to go on this. Now we can go ahead and update the number of new listings this past week. Keep in mind, this information will be updated tomorrow morning. When I email you the latest and greatest, the new price increase, price drop back on the market will be locked. And then, as you know, we will keep on updating the active under contract along with the pending. But so far on the number of new listings over the past 6.5 days, we are looking at 557. 557 new listings so far. Interesting. It's going to be interesting to see how this compares to exactly the same week next or last year. And we're going to click on that tab here shortly. Number of price increases, 5. So number of new listings, 757. 757. I think I did say 557 or 575. Thank you, Sonia. 757. 757. Let's take a look at price increase. Price increase, we are looking at, 94. 94 price increases, 94. Big drop. Big drop from the previous week at 127. We're looking at 94 price increases. Price decrease, we're at 1,747. There's that 95%. We saw 95% September 22nd, and then we have to go back to July 14th. We saw 95%. We saw 95% June 23rd. It's a high number. This means that out of everything that would have gone up or down in price, 95% went down in price. We're looking at the percentage of price movement, 95%. Back on the market, we are looking at 188 back on the market. That goes up to 25%. Something interesting is happening with back in the market. Usually the higher the back of the market, the better the market is, unless we are noticing quits, properties that are terminating because of employment, certainly not interest rates. Interest rates have improved. We're at 6.375 this morning, really good improvement in rates. Even though the past 5 days, look behind me, the bond market. As a matter of fact, right now the bond market is up 0.7 point, and we've had an increase in the bond market over the past 7 days, but rates are at 6.375 right now. So fairly decent rates, best rate environment that we've seen in a while. So people are not quitting their contract because of rates. I think the reason why we're noticing terminations, I am starting to see some appraisal issues because we are having properties that are closing at such a substantially lower price that even though the buyer wants that property, they come in agreement with the seller, you've got an executed contract, and then the property doesn't appraise, the seller doesn't want to budge, the buyer doesn't want to bring more to closing, and it terminates under property approval. There is a slight increase in terminations because of appraisal issues. But I also believe that the reason why we're noticing an increase in terminations is because we're noticing an elevated inventory environment where new listings are coming in the market, competitively priced, and that buyer's putting a contract on that new listing and terminating the other one. Because it's priced better, they feel like they're getting a better deal. That is something that we do notice whenever inventory increases dramatically at a very competitive price. Listing agents, many listing agents and many sellers are aware of the market condition, and that's what they're noticing. That's what they're doing right now. They're saying, in order for my property to sell, it's got to be priced competitively. So let's go ahead and put on the market at a lower price than the competing properties. And then, of course, a buyer that has a property under contract sees that new listing coming in the market, and they start chasing after that new listing. That is a trend that I am noticing. Active under contract over the past 7 days, we're looking at, 333, you all. 333 active under contract, exactly 100 less than last week at 433. Now, keep in mind, this information will be updated. This is where you get to guess. Let's go ahead and get the 5 guesses going. This is where you get to guess how many pending. I have no idea. I have not clicked on that button yet. Melanie Price is going to start us off at a fairly bearish 188, followed by Violet at 212, Sonny at 201, and Charmine at 205. We've got Daniel Cavaleto at 200, and Ryan at a fairly bullish 235. Let's go ahead and click on this number. And okay, you all, this is encouraging. Not bad. Not bad. 223. I'll take this. Not bad. Not bad at all. Not amazing, but not bad. I was expecting something closer to that 200 mark. So we're starting off the week at a 0.59 ratio. We ended the previous week at that 0.73, which means that we're going to be right around that same ratio when this is all said and done, anywhere from that 0.73 to 0.75 or so. That's not bad. Now, a 0.73 ratio, where does that put us? That puts us right around that neutral zone, balanced market condition. Inventory remains relatively stable, anything between 0.6 and 0.7. We're going to see that tangible increase in inventory. So as long as we stay within that 0.73, 74, 75, that's going to give us that neutral zone, which is encouraging. Now, keep in mind that we do see a drop on the number of new listings as we enter the fourth quarter, which we're only a few days away from entering the fourth quarter, which is why your market reports are due here in October. Make sure that you are sending your market reports to every single person that you know. Very important for you to send those market reports. But we do notice a drop in the number of new listings. So now let's talk about how does this ratio compare? Because ratios improve into the fourth quarter, the new listing to pending ratio, because of the drop in the number of new listings entering the market. Absorption drops at a lower degree than the number of new listings entering the market, which is why the new listing to pending ratio improves towards the fourth quarter. Let us look at the comparison. Oh, interesting. Okay, this is where it gets fascinating. We are already, so it is 10:12 a.m. We have 13 hours and 48 minutes left in the day. We've got 13 hours and 48 minutes left for new listings entering the market. And we are already up 8 listings year over year. Same exact week compared to last year. And we're up 1.1%. Meaning we're going to get at least another 50 listings that enter the market today between now and 11:59 p.m. tonight. 50 new listings. So if I go and just do 50 right here, it's going to be up 6.7%. So we are already up 1.1% on new listings entering the market compared to the same week last year. We're down by 21. Price increase. We're up by 337 already on price decrease. And we've been up on price decrease this entire year on price decrease. So we have outperformed price decreases this year compared to last year every single week this year. Back on the market, we're up by 15. Even though we have a better rate environment, we're up by 15. Active under contract, we're down by 122 compared to last year. Pendings, we're down by 216 compared to last year. So we are down 37.8% on demand this year compared to the same exact week last year. This week last year, the ratio ended at a 0.97. 2 weeks ago, our ratio this year was 0.73. Last year, 0.84. We have to go back to September 29th through October 6th to where the ratio was better than it was last year. This year, that week was 0.80. Last year was 0.77. But so far, we're at a 0.59. We're going to end somewhere around that 0.75-ish or so. And last year, it was a 0.97. The end of last year was good. I completely agree with you, Melanie. Absolutely. Last year, we ended the year on a very positive note, and it was a fairly good. As a matter of fact, I've got a little, let me see if I can find that. Where is it? I've got a chart that I keep. I don't publish this. I do not publish this. This is just for me. And what this does, it just takes a look at every single week. And the reason I don't publish this is I haven't been able to find a format where it looks good. I love the data. I just can't find a format that looks good. We are right now week 44 for the year. We're at a 0.59. And then let's just take a look at week 43. Week 43, we finished at a 0.73. Last year at a 0.84. The year before at a 0.79. The year before at a 0.75. And then back in the year 2021 at a amazing 1.29, which is obviously a hot, crazy, good seller's market. We can see where the market changed. The market changed week 23 back in 2022. That's when the market shifted. And we've been in multiple different periods of reds over the past 4 years. Last year, we had a fairly decent, a very good week 44 at a 0.97. Backtracked a little bit. We got up to a point or a 1.3 week 49, which was the best week 49 going back even to 2021. The best new listing to pending ratio ever was week 8, 2021 at a 1.86. We had a 1.83 last week. We tend to have really good last 2 months. Last 2 months of the year, mainly because the number of active or new listings entering the market drops by so much. Just a reality of the market. But we are at a 0.59 right now going into the week. Let's take a look at the monthly. Let us update all of the monthly data here. We're going to start by looking at anything that we need to update for the month of September. Looking at pendings, that does not change. When you look at active under contract, that does not change. Let's start updating the entire month for new listings. We are looking at 3,138. We had 3,515. Let me do something here. I'm going to go from the 28th to the 31st number of new listings. So last year, from the 28th, from October 28th to October 31st of 2024, we had 411 new listings enter the market. We know that over the past 3 weeks, we have outperformed last year. So if I take this 3134 plus 411, and let's go to equals. Come on, let's go to equals. We're at 3545. So or what was it? Did I write that wrong? I did. Thank you, Sonia. I don't know what's going on. 3138. So looks like we are going to outperform last year on the number of new listings. Last year, 3515. So far, 3138. If we have the exact same number of new listings enter the market from the 28th to the 31st this year compared to last year, that's a fairly decent assumption. Even though over the past 3 weeks we've outperformed last year, let's just keep the numbers exactly the same. We are going to outperform last year on the number of new listings entering the market. Now, let's take a look at the number of price increases. We're at 497. Price decreases, that number is coming in at 6,400. Wow, we have already outperformed last year by quite a bit. Last year, 5,932 price decreases. We are already at 6,400 price decreases. There's that 93%. We had 2 months of 93%, May and June and July, 3 months. Got back down to 90. August was a really decent month for real estate. We're back to the 93% price drop. Back on the market, let's take a look at back on the market. We are at 640 back on the market, 20%, matches exactly October 2024. Active under contract, we are at, let's take a look at this number really quick. We're at 1431. 1431 active under contract, and then pending, we're at 1102. We're at a 0.67 ratio right now. Last year, we ended the month at a 0.79 ratio, and right now we're at a 0.67 ratio. The difference between everything that came on the market, new plus back on the market, minus everything that was absorbed by the market is 1,245. That's going to be the highest number going back to July. Last year, it was 869. 2 years ago, it was 926. And then 3 years ago, it was 1214. We're already at 1245. And then 3 years ago, it was negative 564, which is why the ratio was positive. So a 0.67 ratio, where does that put us? That puts us at the tangible increase in inventory, but at the upper stage of the tangible increase in inventory. We are very close to crossing that 0.7 into the neutral market zone, the early part of that neutral market zone. We are going to go over 0.7 because we know that agents are really bad when it comes to updating pendings. As we're updating this information into the first week of November, second week of November, the new listings are going to lock in. Back on the market's going to lock in. We're going to keep on updating the active, under contract, and the pending. That's going to drive the ratio up. I would say, if I had to make an educated guess, we're going to end around that 0.72 to 0.73 ratio. That's where we're going to end the month of October as we keep on updating the information. Let's take a look at sold really quick. So far, we are looking at 1,557. 1,557 sold so far. Last year, 2,581. Withdrawn, I'm noticing a lot of withdrawn properties. This right here confirms it. Already 850 withdrawn and then expired. We are going to see an increase in expired when you transition from October 31st to November 1st. A lot of the listings are going to expire. Agents will usually choose the last day of the month. So when we pull this data, November 1st, and of course, November 1st is going to be a Saturday. I'm going to go ahead and pull this data that Saturday morning. If it's okay with you all, I will email you the updated new listen to pending ratio with the locked October data Saturday morning. So be on the lookout for this information Saturday morning with the latest new listen to pending ratio that you can use for open houses, listing presentations, clients, and whatnot. 376 expireds so far this year. A total of 17,220 properties have quit, have withdrawn or expired. 17,220. That is an astronomical number. Really big number. Last year, the number was 14,936. So a fairly substantial increase on the number of expired and withdrawn. And we're October 27th right now. We know that the number of expired will increase by at least 300 when we cross from October 31st into November 1st. That number is going to go up. Both the withdrawn and the expired this year will beat last year's withdrawn and expired. Let's take a look really quick on the year-over-year comparison. Active listings, this is for the 6-county area. We are up 12.3%. New listings so far, we're down 10.7%, but we know that that number is going to go up by at least 377. If we look at last year's activity, we can expect at least 377. I can expect into the 400s new listings coming on the market between now, this very second, all the way to when it locks in at the changeover from 11:59 p.m. October 31st into midnight on November 1st. We're going to get at least 377 new listings. Price increase, we are down 58. We're going to make that up. We are already up 468 on price drops. Let's focus on pending. Last month, we came in negative on pending for the month of September. September 2025 compared to September 2024, a 4.4% drop on the number of pendings. We are down right now 24.4, meaning on pendings, we're going to be negative double digit. You can cut that number in half. I'd say we're going to end between the 10 and 12% negative on pendings year over year. On sold, we are down 39.7% on sold. Now, keep in mind, because we had negative pending, we had 156 less properties go under contract last month compared to the year before. So if you've got a drop in pendings, it's a guaranteed drop in sold. You can see what happened here December. We were positive on sold because we were positive on pending, and that translated into positive sold. We went negative pending, and then what followed 30, 45, 60 days later, we went negative on sold. The fact that we're now going negative on pending means that in the next 2 months, we're going to be negative on sold. If something doesn't go pending, it doesn't sell. And then you take into account the back on the market. That is why the sold is higher. The negative sold is higher than the negative pending. You're always going to have a drop off from the time it's pending to the time that it actually sells. That right there, my friends, this is going to be your new listing to pending ratio update. Let's go ahead and just do a complete market overview on the active daily real estate briefing, which, by the way, ought to be one of your routines every single morning. Has anyone here started incorporating the routine in your morning, your professional routine? Wake up, do your thing, do your personal thing, but as part of your professional routine, you just take a look at the inventory, take a look at the Austin Daily Real Estate Briefing. I want to submit to you that this ought to be your normal business routine where you just log into teamprice.com. It's one of the first links on the front page, and equip yourself with what's happening in the market. Number of active real estate listings. As of this morning, we are at 16,443 active listings. 59.4% of the active listings have had a price drop. 38.2% remain the same. 2.1% actually had a price increase. We are up 14.4% on active listings compared to last year. Cumulative new listings, we're up 4.3% cumulative new listings, and we still have about another 500 or so new listings entering the market between now and the end of the month, meaning we're going to cross the 45,000 cumulative new listing mark. When you see this chart next month, next Monday, it's going to be over 45,000 new listings having entered the market. On the pending side, we are down 4.8%. That is where we are. We're exactly where we were in 2023. And we are down 4.8% compared to 2024. 2024, we had 4,130 pending listings. 2025, we're under 4,000. We're at 3,930. Cumulative pending. We are down 3.3% on the cumulative pending compared to last year. Last year was better than 2023, only by 0.6%, but we'll take it. So far, we're at 37,116 cumulative new listings and almost 45,000 properties that are new on the market. Activity index, 19.3%. 19.3. Last year, 22.4. On the resale, we're at 16.35. New construction, 26.63. And then here is now one of my absolute favorite charts. This is going to be your activity index only for resale. And what we're doing is we're defining the market. Is it an expansion, equilibrium, softening, the danger zone under 20%, or where the market freezes, the crisis zone? And that's going to be under 15%, where there's a buyer paralysis, price corrections accelerate. And we can see that on the expansion side of things, we have one zip code. This is going to be the North Austin area, Wells Branch, Jack's Pond, parts of Schofield Farms. That is the only zip code over 30%. The only one. Which, by the way, little plug-in right here, I've got a beautiful, gorgeous listing coming on the market in the 78728 zip code. It's going to be vacant, really nice, newly built. It's going to look spectacular. It's going to be priced maybe around the 425-ish or so. We're tracking the market daily to make sure we get the price perfect, but it's going to be priced very competitive. Comes on the market November 21st. November 21st. And I will say this, that's going to be the best location for an open house. Daniel Cavallero was the first one to ask. Absolutely, absolutely. You can absolutely do an open house. Matter of fact, I might do it with you. If Talitha's out of town, I'll probably go ahead and just do it with you. We can tag team that. That's going to be an amazing location for open house. That's the best zip code in the entire area. Really excited for that listing. Really excited. And you can see that whenever it's an expansion, it's going to be green. If it's not an expansion, if it's equilibrium or softening, it's not going to have any formatting. And then if it's within the under 20% mark, equal to 20% or under, it's going to be in red. Really eye-opening to see it this way. The pending for this month at a 0.66 for the entire month, and the cumulative number of properties that are in essence added to the market. This is where we take the new listings minus the pending. We're at a plus 7,403. Yellowish, meaning pending, blue/teal, new listings, and there's the gap right there, 7,403. The ratio for the entire year is at a 0.71. And months of inventory currently at 5.84. Last year, this same day last year, it was 5.11. So we've got a 14.2% increase in months of inventory. I went ahead and created that same chart for all properties, resale and new construction, for months of inventory. And here we can see the number of cities that are still in a accelerated market. It is really interesting that we have 15 zip codes in a accelerated market. 15 zip codes. Look at all the zip codes that are still in a accelerated market or in a seller edge market. So even though the entire market is pointing towards a neutral plus or a buyer advantage market, and that's where we are for the entire market. We're in a neutral plus buyer advantage market. So much of it is zip code specific. I am talking to a few of you that are submitting offers in the 3949, 27, 28, 50, even into Round Rock, and you're like, multiple offers? Absolutely. Everything is zip code specific, neighborhood specific, and then, of course, also property specific. That's why you can't look at if you go to a listing presentation and you're focused on the macro market, which we have to have a macro market conversation with our clients, but then you've got to drill down to the zip code, the subdivision, the street, and then more importantly, that specific property. If you're only focused on the macro market and you go to a listing presentation in the 3.9 or 4.9, you might miss out on the listing because you're too much of a doom and gloom. Well, the same thing is if you go to the 7.8 to 7.41 area and you just left a buyer presentation, maybe in the morning you're submitting an offer in the 3.9 market and you're having to go multiple offer. And then in the afternoon, you're doing a listing presentation on the 4.1 market and you're a little bit too bullish. You're like, oh yeah, I just submitted an offer, multiple offer, different market, doesn't matter. You've got to start with the macro. If you need hints on how to create your listing presentation for today's market, take a look at our last training. We spent a majority of the training going over how should your listing presentation work in today's market. Year over year, the city of Austin has a 1.7% increase in months of inventory. Year to date, a 22.2 or 22.8% increase year to date. We are forecasting that 2,368 properties will sell this month. That is going to be a drop of 3.4%. We are 7.2% above average when you look at the cumulative sold properties. When we adjust it for population, the good news, here's the great news, that we are forecasting that we're crossing 1,000. If you look at the Monday morning touch point recording from 2 weeks ago, that was our marker. That was our prediction. Hey, we're going to cross 1,000, but it's going to be really, really close. The good news is that we are crossing 1,000. It's a guaranteed that we are crossing 1,000 sold per 100,000 people. So that means that we're not going to have the worst year on record. That's the good news. Do I think we're going to cross 1,023? Absolutely not. Not enough sold properties, especially when we track the pendings for the past 60 days. We don't have enough properties that went under contract to cross 1,023. We're going to end up at about 1,010 to 1,012 sold properties per 1,000 people. Now, here's the good news for us. Big drop on the number of active real estate agents from last month to this month. Over 1,200 of our fellow agents are no longer agents. They left the business, which means even though the percentage of property selling flat, let's just call it flat, when you divide the number of properties sold the entire year by the number of active agents, we're up 1.2%. So those who are left, those who survive the battle, get to reap the benefits, the spoils of war. And we're at 1,380 sold properties per 1,000 agents. So the question that I'm getting over chat is that for this month? One would hope. No, it's not for this month. It's for the entire year. That's every single thing that has sold this entire year. 1,380 sold properties per 1,000 agents. Let's take a look at pricing. A little bit of a backtrack on pricing, but prices for the most part are holding firm. We are looking at a 9.6% increase, not year over year, month over month. The average sold price so far is over $600,000. Now, do I foresee that over the next 10 days, this is going to go under 600,000? Absolutely. That is a guarantee. Is it going to go under 584,000? There's a strong probability that it'll be under 584,000. It's going to be closer to the 575-ish or so. But it's going to be positive. We are ending October positive. But keep in mind, properties that are selling in October went under contract in September. And for the most part, especially the first 2 weeks of September, we had a really good first 2 weeks of September. We were positive pending year over year up until about September 10th through the 14th, we were positive. Those properties are now closing this month. And for the most part, October, we were positive last year, 0.2%. So we tend to have fairly decent Octobers. And then we go into November, December, we do notice the market pulling back a little bit. But we can see that so far with an average sold price of $600,190, that is going to mark a really nice increase compared to last year. We are down 11.99% on the average sold price. On the median side of things, we are under 440,000. We're at 439.5. We are up 2.2% year over year. I forecast that this number is going to go negative. It's going to go negative maybe 0.5 to 1, but this number is going to go negative. We are down 20.09% from the market peak, $111,000. When we look at the median sold price compared to 36 months prior, we're down 6.49%. Based on today being the absolute bottom of the market, which I don't think it is. I think the market is going to correct another 8 to 12% over the next 12 to 18 months. But let's assume that today is the bottom of the market. If we were to apply the 25-year compound appreciation, we are looking at a return to peak of September of 2030. It will take 60 months for the market to return back to its peak value. So far, the average sold price for the entire year is positive. We are up 0.9% on the average sold price for the entire year. On the median side of it, we are down 1.7%. We're at 97.2% sold to list price ratio so far for the entire year. Now, what is driving the market up? It is the 25th percentile, the top 25th percentile. That is up an amazing 6.5%. City of Austin, the top 25th percentile, is up 7.4%. Whereas the bottom 25th percentile is down 4.9%. The reason why the median sold and the average sold is on the high side is because that top 25th percentile, not only is it maintaining the market, it is driving the market right now. So far this year, we've had 9 cities go up in value and 20 cities go down in value. When you look at the median price of every single thing that has sold this entire year, and you compare it to the median sold price in 2024, 9 have gone up and 20 have gone down. This is the absorption rate. Sold divided by active. The reading so far this month is at 10.75 as the absorption rate. Sold divided by active. That number is going to go up, but it's going to land somewhere around the 13 to 14%. We are going to outperform 2008 and 2010. But outside of 2008 and 2010, no way we're going to reach 16%. I'm hoping we do. That would be amazing. I want us to. We're not going to outperform 18.4. There's no way. Not enough sold properties are going to hit the market to outperform 2009. We're going to be somewhere in between 2008, 2010, and 2007 and 2011. It's going to be somewhere in between there. 16.3 is what we had July of 2025. I'd say it's going to be close to that 16.3. And then this is where we have our scoring the Austin market between 0 and 10. 10 being it's the hottest market in the world. 0, there is no market. Right now, we're at a 1.75. This takes all of our indicators, absolutely everything. It takes everything, the new listen to pending ratio, the activity index, the absorption ratio, every single metric that we track. It just creates a seasonal adjustment, and it says, based on everything, let's rank the market from 0, meaning garbage, to 10. What do you think it's going to land on? 4. It's going to land on 4, right around 4. That's what I'm hoping for. I'm being very positive. It's going to be better than 2. Absolutely, it's going to be better than 2. As we update the pendings, agents are really bad when it comes to updating pendings. Builders are bad when it comes to updating pendings. I forecast that we're going to end up, I want to reach 4. Realistically, 3.5 to 4 is where we're going to land on. That's what I am forecasting. Very good question. And that right there is going to be your daily briefing, you all, your daily briefing. Let's take a look at the economic calendar, see what's going on this week. Supposed to be a fairly big week, but with the government being shut down, we're going to be limited on the amount of data that we receive. We are. Okay, so they're expecting 3.9% preliminary Atlanta Fed GDP. We've got a bond auction came in better than expected, both the 2-year and the 6-month. Big one tomorrow, and this information will be published because it is not from the government. It's going to be your house price index along with your Case-Shiller, Standard & Poor's Case-Shiller home price index. When this information is updated, we're going to be able to update our home price index, showing you where Austin compares with the top 40 cities and then the rest of the cities within the country. We're going to have new home sales, consumer confidence, a really big day tomorrow. I'll be updating this information both. You're going to receive an email with this information along with the internal Facebook Team Price Facebook group, which if you're not a part of the internal Facebook group, send me an email and I will send you an invite. So send me an email and I'll send you an invite. It's a internal private Facebook group. We have interest rate decision. Violet had a question on Friday during our team meeting. When is the rate decision? There we have it. It's going to be Wednesday at 1300 hours, which is 1 p.m. We are not going to get GDP and we're not going to get inflation data. The government's shut down. That information will not be published. And then we're not going to get any of the PCE information for Friday. All of that is going to, unfortunately, not going to be available. It's going to be interesting to see how that plays out with the information not being available. Let's take a look at rates really quick. We are looking at, and all you have to do is go to resources.teamprice.com, log in with your Team Price email, and we can see that this morning, conventional 30 years, 6.375, 15-year, 6%. FHA, really good, under 6%. Decisively under 6%. 5.875, VA at 6, USDA 5.875, Jumbo at 6.375, and then investor conventional at 7%. We are noticing some amazing investment opportunities within the area. I want to point out the cap rate resource that we update on a daily basis. You can see 1027. This information was updated this morning. And we have right now, how many zip codes? We have 24 zip codes out of the 75 where the cap rate, using the median sold, using the median rent, the cap rate for that zip code outperforms the desired cap rate, which is the 6-month T-bill. In some of them, like the 78725, we're looking at a cap rate of 5.75. So we are noticing an increase in investor demand, which is why when you go to learning and you go to contract proficiency, the contract proficiency due in 2 days is going to be another investment property. $205,000 offer, 25% down payment, 7.125 rate with 2 points. Seller is paying 3%. Buyer wants to see the listing history from the MLS and then provide the simple cap rate and cash flow analysis. All of these resources are available when you go to resources.team price and you go to transactions and you go to investment properties. All of that information there is available. When you go to analyze investment properties, all these are links that you can click on and it'll help you analyze that investment property. When you go to cap rate, it takes you to that simple cap rate calculator. I cannot stress enough how important it is for you to learn how to work with investors. Learn how to create a simple cap rate calculation. Learn how to create a cash flow analysis so that not if, but when that investor contacts you and they want to submit an offer. I mean, this property is insane. As a matter of fact, let me go ahead and pull up this property really quick. Here is the link that comes up. I'm going to find this MLS number here for you. This property is currently active on the market. It's in Kyle. It's in Brookside. Look at the history of this property. This property was originally listed for $329,900. It expired at $299, relisted at $285. It's at $227,000 with 174 days on the market. If I'm working with an investor, what am I submitting an offer on? Yeah, $205. That is why we did the contract proficiency at $205,000. This right here is a cute little property, really cute property. And this is the type of property that investors are going to be looking at. It's a fairly newer home built in 2017. Unfortunately, it doesn't have 3 bedrooms. It does have 2 bedrooms. I'd rather have a 3-bedroom, but $205,000. When you're doing your cash flow analysis, what are you going to have to do? You're going to have to pull lease comps, take a look at the property. That is why we're creating this contract proficiency with a focus on investor. About every 3 to 4 contract proficiency exercises, we're going to focus on investor because we are seeing an increase in demand for investment properties. And when you take a look at this chart right here, you can see this is where investors enter the market. When this line enters this box, this line has been going up. It bottomed out back in April 2024 at a negative 2.5, meaning the 6-month T-bill was plus 2.5 compared to the Austin area cap rate. You're not going to buy real estate when you can just park your money on a 6-month T-bill and get a higher rate of return. This line has been going up. It will enter this zone. I would say by second quarter of next year, we're going to be right here. It's going to enter this zone by the latest second quarter of next year. So what is it that you have to do? Anticipate that. Be ready for that. Learn all of these terminologies: cap rate, cash flow, return on investment. That's why we're doing these, so that when we enter here and investors start flooding the market, well, then you are ready for it. The previous listing said 3 bedrooms and it's over 1,700 square feet. I think they might have made a mistake. Oh, there we go. Very interesting. Let's take a look at the previous listing. It did show a 3-bedroom. Let's take a look at Realist. What does Realist say? Does Realist have 3 bedrooms or 2 bedrooms? What's going on? Imagine if Open Door made a mistake and all of a sudden that's like a killer deal. Oh my goodness, you all. Realist shows 3 bedrooms. That means that Open Door made a mistake. So how many buyers, how many investors are not even looking at this property because the current MLS listing shows a 2-bedroom? Let's take a look at the pictures. 1 bedroom. Is that still the one? I think that's still the one. 1 bedroom. No, is that the 2? Two bedrooms, 3 bedrooms. It does have 3 bedrooms. Yeah. There we go. There you have it. Which, y'all, it's why it's so important just to, y'all, there are opportunities out there. I want each and every one of you next year to have the absolute best year that you've ever had in real estate. Like, you have to. Let's make it an absolute priority that next year is your absolute best year in real estate. Plus, the upstairs flex room, that's divided into 2 spaces. Yeah, there's like that dividing wall in between, which is really interesting, but I'll take that. I think that's great. Here is something for you. I emailed you this as a PDF, but I want to go ahead and just post this link. This is a little, I'm big into routines. I don't know if you've noticed about me, but I really like routines. Did you know that about me? I'm a really big fan of just a really good, solid, simple routine. So I wanted to create this resource for you, and I've got my own, and you ought to adapt it. I have one that's personal. I just do really the same thing every single day. But I wanted to create a resource, hey, how to kickstart your day in real estate, how to create a routine. And I commend you all for being here because isolation is the number one killer of real estate. The agent that starts isolating themselves, it's just a matter of time before they leave the business. So this is a little cheat sheet for you. Hey, start your day with gratitude, study the market, read the contract, create your daily plan, stay connected, don't isolate, start immediately, take action. Really simple. Does not have to be complicated. This is not a complicated business. But what I want to submit to you, it's create a routine. Create a routine that part of that routine, it's, hey, read the contract daily. Study the market every single day. Click on this link. It's going to take you right here. When you scroll down, it's going to take you to the daily. You can also take a look at the previous few days. But start your day with a routine. Program this into yourself. And here you begin with gratitude. Every single morning, you ought to and do your own routine, whether it's, working out, journaling, prayer, contemplation, meditation, exercise. You have your own personal routine that you ought to follow. It's just healthy, really good. It ought not to be, I'm going to start the day by, reading the news. Y'all, I don't care what part of the spectrum you are, political spectrum or news spectrum you fall. Please don't start the day reading the news. It's just going to depress you. Hey, start the day with gratitude. Write down your clients. Write down the fact that you get to do this. So this is just a nice, really simple resource that you can just go to it and just start your day in a really, really positive note. It is exactly 11 o'clock. This is our 1 hour Monday morning touch point. Thank you all so very much for joining. Super appreciate it. You will receive a link to this meeting with a recording along with the updated new listing to pending ratio. Let us know what you need. Please show us how to schedule meetings coming up. To see any we are skipping, please show us the schedule. Okay, the schedule. Yes, the schedule of the meetings, that is where when you go to the drive, we actually have that on the drive. And what I can do is I can create that as a page on resources. Happy to do that. But we have a meeting every single day. The next day that we do not have a meeting is going to be the 14th. But we have a meeting, every single day. We've got a meeting this Friday, this Wednesday over Zoom, this Friday, the 3rd, the 5th, the 7th, the 10th, the 12th. We do not have it on the 14th. I believe I fly back like crazy late on the 16th. I'll be in Chicago the 13th to the 16th. And then, of course, we've got Thanksgiving, nothing going on right here in Thanksgiving. But that is the link. That is the link. You are very welcome. You are very welcome. Good stuff. Any other questions? Any other questions, comments, concerns, criticisms, or complaints? Going once. 11:14. Yes, indeed, John D. And John D just celebrated a birthday, John D. I hope you had an absolutely fantastic birthday. You celebrate. And Sonia's birthday was also on Friday. It was fun to see Sonia on her birthday. So, yeah, lots of birthday. Renee had a birthday on Thursday. We had John D on Wednesday, Renee on Thursday, Sonia on Friday. So there we go. Happy birthday to you all. Well, you all, that is all I have. Thank you all so very much for joining. Super appreciate it. Have an amazing, excellent, fantastic rest of your day. Take a look at the resources that we've created for you. If you do have any questions, please feel free to reach out, and I will chat with you all later.